Okay, July 25th, 9 a.m., Finance Committee, a special meeting or whatever you want to call it. Call the meeting to order and take the roll call.
McTaggart,
Present.
Alt,
Here.
Bowers,
Yes.
Curtis,
Yeah.
Johnson. Yes.
We have a motion to approve the agenda.
So moved.
We have a second.
Yeah.
All in favor? Aye. Okay, we'll move to public comments. Any public comments, anyone? Okay. We'll move past those and we'll move to Hope Wheeler's here with Clifton Larson Allen to go over the 2018 audit. So you should have, I guess, the summary here. And then all the nighttime reading for the next week you have in the books there.
Yes, good morning. Thanks for having me here this morning to present the audit. And as Mike said, I put together a presentation, a summary of all these reports, since it is a lot of volume. It's hard to kind of flip through all these pages. But if you look through these reports and have any questions, please feel free to let me know. But this presentation summarizes those and our audit process. So turning to page 2 of the presentation, just my plan here this morning is to talk a little bit about the audit process in general and hit some highlights from our report deliverables and then go over some trends compared to prior years, and then answer any questions you might have. On the third page of the presentation, our deliverables, there are 3 deliverables here. The audited financial statement, which is the bound report, that is kind of the crux of our audit process, and it shows your fiscal year ended 2018 results. And we also are required to issue a governance communication. That's one of the thicker separate letter. There are some required standards. If you've been on this committee in the past, you've seen this letter in the past, but just certain required communications we have, and I'll talk over that within the presentation. Then the third report is our internal control communications. There we report findings that we had, and we'll talk about those also. In addition to that, I will say there's what's called an annual financial report, or an AFR, that's due to the Illinois State Comptroller's Office, and that was due, I think, this weekend, actually, the extended due date. So that has been filed, and the audit gets attached with that and filed electronically. There's one other report that's new this year. We'll talk about it. Save the best for last. Talk about that at the end here. That still needs to be done. So the terms of you're engaging us as your auditors were to express an opinion on these overall financial statements and your financial position for the fiscal year end, and then to summarize any audit findings and present them to you as a finance committee and management. Page 5 of the presentation, just, we're out here actually for several weeks when you add together the preliminary work we do, and then the year-end field work we do, and then several weeks back in the office wrapping things up. We can't look at every transaction, so this really summarizes how we go about performing our audit. We use what we call a risk-based approach. We plan and brainstorm and think about, okay, these are the areas of higher risk, let's focus on these. We select samples and then test certain items. These just show some of the areas that we consider higher risk areas that we look at. We look at your internal controls, especially over payroll and just general disbursements. We also look at your cash and investments and perform audit procedures there. Receivables and revenues. Revenue recognition is something basically our firm always considers a risk. That's something we're always focusing on. Pension liability, that being a significant item typically, and an estimate, that's an area we focus on. And then just your financial reporting and closeout processes. We definitely look at other areas. These are kind of the highlights of the main risk areas. Page 6, the financial highlights here. This financial the large bound report starting on page 1 of that report, does show that we have issued our opinion on the financial statements, and that's an unmodified opinion. While that maybe doesn't sound good, it's a positive. We haven't modified our opinion to any exceptions. So it's a clean or unmodified audit opinion on pages 1, 2, and 3 within the bound financial statement. Once again, just to hit some highlights of the financial statement. As a governmental entity, you have 2 different reports within the financial statement. You have a full accrual basis statement called the government-wide statement near the front, and then behind that you have fund statements. On your full accrual statements, there you show capital assets and you depreciate those. Any liabilities you show as debt, long-term debt, versus showing it as an in and out on the income statement. To highlight those, your assets and deferred outflows at the end of 11/30/18 were $75 million. That includes $49 million of capital assets net of depreciation. Your liabilities were approximately $9 million. The net difference between those two, your net position, it was around $66 million. So $66 million of your net position there is tied up in, or $48 million is tied up in your capital assets. So that's not a bad ratio of assets to liabilities at all in net position. In fact, I will point out that a lot of the government entities we work with, that net position has actually become negative because of their pension liability, and you guys have done a good job of taking care of your pension liability. Business type activities, yours are the 911 and the county farm. So that's shown separately within the statement. The total assets there, $1.1 million at the end of the fiscal year. Your liabilities very small at $15,000. So net position in those funds of $1 million. The statement of activities on the full accrual basis, or your profit and loss statement, shows a net loss for the county of $1.8 million overall, and then the governmental funds, and then your business type funds, a net income of $181,000. The modified accrual statement.
Just so it's clear to everybody, we normally, or that's not, because we normally do everything when we're doing our budgeting stuff from a cash perspective.
Yeah.
And the fact that this is accrual, that I think we've had losses before, but that doesn't necessarily, from the way we typically look at it from the government perspective, or I mean, from our budgeting process is a cash basis, and that's normally, there's a difference in what we're talking about there from.
Yeah.
It's not like we had a
with
$1 million loss of
cash.
We spent $1 million more than what we took in, because some of that's with the pension.
That estimated pension
Estimated,
liability or
yeah,
asset
exactly.
really greatly swings each year. That's included in that. Yeah, your depreciation, non-cash expenses are included in that. So this next segment is easier to follow, frankly, because it's closer to your budgetary basis. I would agree. And it's broken down more by fund, so you can see totals, but you can see here's the general fund and some of your major funds. So the next group of statements is that modified accrual statement. There, if you purchase a capital asset, it's shown as an expense, the way you budgeted it. If you make a payment on any debt, like a capital lease, it's shown as an expense. But your major governmental funds, we're required to break those out and show those separately. The general fund is always major, so that has a separate column. Your county motor fuel tax fund was major this year, your IMRF fund, your county highway fund, and your public health department fund. Then all the other governmental funds are combined together in an other non-major column. But you can still find a detail of each fund in the back of the statements. So talking about those major funds, since they're some of your main operating funds, the general fund, the fund balance at the end of the fiscal year was $2.4 million. County motor fuel tax was $1.9 million. The IMRF fund had $3.2 million fund balance. County highway, $1.8 million. And then public health department, $935,000, close to $1 million at the end of the fiscal year. All your other governmental funds combined together had a positive fund balance of $5.4 million. There are times there we're reporting negative fund balances too, so you can see all those show a healthy fund balance. Then to talk about the net income or net profit or loss for the year in these funds, as Mike mentioned, it looks quite a bit different from the full accrual basis on the modified accrual basis. So your general fund showed a net income of $236,000. Now there, it may look different from your cash basis reports that you saw because there are some receivables accrued. If you're owed some revenues from the state, those are recorded as a receivable in revenue if it's going to be received within 6 months after year end. Then the county motor fuel tax fund, which does swing a lot each year, that showed a net loss for the year of $1.2 million. Net income in the IMRF fund of $128,000. County highway major fund, $311,000 net income. And then the public health, close to breaking even, but net loss for the year of $31,000. All the other governmental funds combined for net income of $14,000. You also have an internal service fund, what we call an internal service fund in our accounting lingo. That's your group health insurance fund. That's shown separately in the statement. That about broke even the way it really should, and it showed a net loss of $3,000 for the year. Then you have fiduciary funds, essentially money that you're holding that isn't yours. The private purpose trust fund, which is the township motor fuel tax fund, has total assets of $7 million at the end of the year. And then agency funds have $5 million at the end of the year. Those would be like the circuit clerk holding money, county clerk having money on hand at the end of the fiscal year. Those are the major agency funds. A lot of numbers in there, so I'll show you some graphs here in a little bit to compare to other years, but I know it's a lot of numbers thrown at you, so I just try to hit some highlights and summarize. So to jump into the governance communication letter, there we just want to explain to you as a finance committee that there were no changes in the scope of the audit. What that might mean is if we started the audit and found out you were required to have a federal audit, something like that, but it stayed as the way it planned and no changes in our scope. There were no new accounting policies implemented. Now you did consider, there was a new one required to be considered this year called GASB 75 for other post-employment benefits. So you probably talked about this some, but you had an actuarial study done to determine what kind of liability you have for post-employment benefits. So if someone leaves and chooses to continue their health insurance coverage, that is triggering a liability now for any employee you have now. You're essentially accruing a liability related to that. So that was considered, and they did the calculations, and it was a large number, but not large enough that had to be recorded on your full accrual statements. So now you know where you're at, and then hopefully you can avoid having that study done each year. Other estimates, just wanted to share on those full accrual statements. There are items that are estimates. In the net pension, it swung to an asset. So you're actually on the asset side versus the liability. So that's unique. We do see that, especially for people that have made some advance payments. But that can swing back and forth, as I said. But that's based on a bunch of actuarial assumptions and that we look over and study, and then we go through the actuarial report, and actually we found errors in their report, but make sure then that does tie out in the end with what the study shows related to IMRF. Difficulties, we'll just want to share with you as your governance if we had difficulties in the audit process. We are here later than we typically are, which I think you probably talked about along the way with the changes in the finance department. It did take longer to get the audit process done. We helped this year, like we did several years back, with some of the modified accrual and the full accrual adjustments. But overall, it went pretty well at first, and then got to some difficult points, and it was just hard to get all the information we needed in the end to get done a little more timely. But I think we have that figured out now, and I know it was hard because Amanda and Jill hadn't been through this process before. Like, Nina was really in charge of it and dealt with most of the audit. So I think it was a learning process for all of us, and I think it'll go a lot smoother next year. And then we did have, like you said, several adjustments, audit adjustments within the process. They are attached to the governance letter, so you can see those. There were primarily the accrual adjustments that we expected to make. There were some that were corrections, maybe some transfers and things like that that needed corrected, but those are attached to the letter. Then we also accumulate some adjustments that we don't get posted in the report or to your general ledger. Those we call past adjustments, and those are attached to the letter too, so you can see those. We just make sure those don't grow to a large enough number that they really have to be reflected in here. Then the internal control letter, a couple of findings in there, just wanted to share. There were 2 material weaknesses reported in this letter. One, and if you've been on this committee in the past, you saw years ago when the auditor prepares the financial statements and prepares the accrual adjustments, then we have to consider that a potential finding. I think that finding had gone away with Anita's assistance in the past, but this year we knew going into it we would be assisting with doing those accrual adjustments again. So we report that here, that we have prepared those and prepared the financial statements. Now Jill and maybe Amanda, I'm not sure, but reviewed the financial statements. Mike reviewed the financial statements. John had the financial statements too. So there are people looking at them to make sure they don't see anything unusual or out of the ordinary. And then, like I said, just discussing that we made some material and immaterial adjusting journal entries in the audit process. Those are things that we can go over this year. I'll still come out during the year and meet with you, Jill, and we can go over those adjustments and some of your current financial information and see if some of those things can get cleared up before the audit process. On page 14 of the presentation, this is a different level of finding that's called a significant deficiency. There were a few listed here, and one you've seen in the past that in some of the smaller departments that handle some cash on their own, there is a risk, and we found that in the sheriff's office again, that there's a lack of segregation of duties, meaning one person can handle a lot of the financial information without the proper, having enough people in place to check over that work well. It creates a risk. We didn't notice any issues, but we just want to share that does create a risk. So there are ways to look at adding some reviews and segregating some duties and there was progress made, I will say that. There was progress made in the department by, in one, like with the commissary, having someone else do the bank reconciliation, but there still overall is a segregation of duties issue. Then general journal entries, those are non-cash manual adjustments to the report, so those always trigger a risk in any entity. So you really want any journal entries like that reviewed by someone other than the preparer and documenting that review, making sure you have supporting documentation. And generally you do a pretty good job of that. We did just notice there were some that didn't have the proper reviews. This year, at the end of the year, there was an uncollateralized bank deposit. That's, part of the statutes.
Sorry.
Yeah.
What does that mean?
How many journal entries are we having to make? I mean, I guess how big is that? Very regularly, or I mean, how many a month are?
Yeah, we do them fairly regularly.
Yeah.
And since we've kind of made the changes in the office, we've kind of went back to when I originally got hired of, I've been trying to complete them and then giving them to Lacey for entering. Amanda's also been assisting in reviewing those, and then we also made some changes with the treasurer's office as far as documenting when we are posting their journal entries as well.
On the collateral, what that means is the statutes require for governments that when you have deposits at a bank, there's always a risk that what if something happens to that bank? So they want proof that you have some collateral. Each bank has FDIC insurance up to $250. So if you're higher than that, then they there are typically some pledged, US treasuries or securities to help make sure that if something were to happen to that bank, your deposits would be covered.
That's the bank's
The bank,
To ask them.
yeah, you have to work with the bank
With
to
the
make
letter.
sure. Yep, you should be
That's-
getting something and making sure that they are covering you properly.
So anytime your balance is over that, if you just call them and ask them for the letter, they'll just send it out to you.
And that's something that the treasurer's office may be doing. We haven't ran into that here recently, so I'm not sure if maybe a large deposit came in right at the end of the month or what exactly happened there.
Maybe put on the agenda that, or whenever Kurt comes in or at the, I mean, the fact that we got multiple people changing positions and stuff, it
Right.
might have slipped through the
But it
cracks.
could have been just with tax
Timing,
money
yeah.
coming in,
Sure.
that it.
You
it
probably just need
transferred
to-
over like that. But you know, you guys could set it up with the bank too, that once your balance reaches this, they automatically have to send a letter and they'll do it.
Yeah, that would be
It's way.
a good way to control
You
it.
have to remember it, yeah.
Well, let's
Because that does.
maybe get that set up and
Show us
Yeah.
footnote.
we'll talk about it at the August meeting or whatever. In the mean, that gives you a couple weeks to talk to them or whatever, and get clear. If you need to talk with Kurt or whoever.
Then the
whatever
last
needs to be
item
done.
here was, we did find this year a bank account. I think one of the banks confirmed a bank account we weren't aware of. And it was not a large bank account. It was a small bank account. I think it's one of these fiduciary or agency type funds where you're handling money for someone else. But really, that just, you really need to make sure those are under all of your other controls. So everyone's aware of those. They're being reconciled. They're being tied to a general ledger.
Is it new or it's just always been in limbo?
I don't think it was new.
It's been just,
Yeah.
Yeah,
And I
it's been one, from what I understand, talking to Yvonne, that has always been there.
Okay.
That she doesn't do anything with as far as reconciling.
so now we got it
Maybe-
in the normal process,
need it?
or do we need?
I don't know. Yeah, any of those that
I mean,
you
if you don't
cannot
need it,
deal
get
with
rid of it.
are better. But if for some reason you feel a fiduciary duty to have that account, then
I wonder if it was a bond account or something.
I forget what she said it was. I
for.
do too, and that's what I was just
Well,
thinking.
maybe
something
put
to
that
do
on the
with real
August
estate
stuff and we'll
taxes.
Yeah, it,
talk with Kurt or Yvonne or whoever,
yeah.
get clear on what we need to do with that, and if we do need it, then
Bring it to life,
Obviously,
if not, get rid of
put,
it.
Yeah.
get it in the normal process, and if not, let's get rid of it. The fact that it never showed up before, probably we haven't used it in some time, I'm guessing. I don't know.
I think it's been there.
it's the trustees,
Yeah.
it has to do with the trustees account.
Okay. It's just
Something like
sometimes
that.
when you're handling other people's money, they,
Okay, well, the new company will probably set up something differently anyway, so I would just even ask them how to get rid of that.
Rid of that, and we'll probably do.
We'll put it on the agenda or whatever for August, and you guys, if you need help, let us know, but maybe get to the bottom of what we're gonna do with it, and talk about it. Hopefully we can get her resolved there next couple weeks and get that off our naughty list.
Thank you. Page 16, looking at some trends here for your governmental funds, so it just excludes the business tech funds, the county farm and then one, and the township motor fuel, but these are your revenues. Comparing the blue bar is 2016, the gold is 2017, and the green is 2018, by your major revenue categories that are as shown in the financial statements. Property taxes obviously being one of your largest revenue sources. You do see the trend down in your property tax collections with the green bar, the 2018 being a lower figure, with that, you know, primarily related to the IMRF levy decrease. Then your charges for services, smaller number, but have stayed fairly consistent over the years, through the years. Your licenses, permits, your fines and fees are the next column. Then your next large revenue source is your intergovernmental, so your sales tax and all those other government revenue sources stayed fairly consistent over the years. 2018 year fairly comparable to 2016 year, down slightly from 2017. Some of that can be timing from the state of Illinois. Then your interest in miscellaneous numbers are small figures. Yeah, of course, interest.
I know interest rates are low, but is there any other accounts that we could put into a savings account to earn us a little more?
I don't know that I have the answer to that off the top of my head. I would really have to study your cash flow for the year. That'd be a good question for Kurt, really. Is there some cash that's sitting idle for too long that could be invested?
And do we know our list of our CDs and stuff like that right now?
Mm-hmm. Yeah.
Talked about that a couple months ago.
Okay.
Actually, we need to talk to Kurt about that, and maybe even just see about splitting some.
We talked back in March
Right,
or
and we-
February about something about that, and I don't know if we ever followed up on that, on what, I don't think we did, but we probably need to talk with him about kind of what we can do there,
Thank you.
especially with the budget stuff. Maybe when he's in here or whatever, we need to talk with him
Okay.
for the budget stuff.
On page 17, now looking at the expenditure side compared to 2016 and 2017, a lot of things lumped into general government expenditures. You do show a decrease in your overall general government expenditures compared to the prior years. Your health and sanitation expenditures, a lot of that relates to the health department. 2018 fairly comparable to 2017. Justice and public safety, those expenditures are up some in 2018 compared to the previous 2 years. And then your transportation and highway, once again with some of the county motor fuel tax, some of those highway funds, the expenditures do really increase and decrease from year to year depending on the projects going on. And then the rest are pretty minor categories. And then this last slide here shows the fund balances, and I talked through a lot of the fund balances, but this shows your fund balances over the past 4 years actually, and where you're at, and that you have these positive fund balances. General fund you've grown that fund balance some from 2015 through the 2018 year. And each of the balances, the fund balances grown some except that county motor fuel tax fund, which is
Why is that? It went down 1.2 million.
I think he's, if I remember right, last year when we talked in the budgets
Which
and
one
stuff,
is
he
that?
had some big projects that they were doing, and it's more cyclical, like they got big bridge projects and
Right.
things like that, and
It'll
So
get cleaned out.
it gets,
Yeah.
it builds up, and then they spend a bunch of it on big projects, and it's something.
yeah, I
When,
can't
when we do
remember
Is
a
this-
hearing with,
Is this funded by the federal the state government? I mean,
Motor
that's
fuel
Is that all-
motor fuel tax,
Motor-
like out of
motor,
the.
your
I mean,
driving
out of your,
tax.
the
Motor
tax that you
fuel
pay at the
Gas
gas
station.
station.
gas
Yeah.
station.
wonder if the new increase in price will reduce that.
I don't think we're not gonna see that, any benefits from it.
Yeah.
If that's what you're
People go to Indiana.
Yeah,
Well, no, it's just more of it goes someplace else rather than stays local. We'll still see the same amount, if not a little less.
All right, that's all I had. I did, as I mentioned earlier, there's the state of Illinois, I think Amanda's very familiar with GATA, which Government Accountability and Transparency Act. I think because the state of Illinois was audited, they came out with all these new requirements for the governments, and so a lot of forms have to be filled out. You've got the internal control questionnaire done. A new requirement for your November 30, 18 fiscal year is what the acronym is, a CIFER, which that stands for Consolidated Year-End Financial Report. So it's taking all these numbers and putting them in another format, like we've already done with the AFR. But then the state agencies try to go back and compare what their records show they've given you to what this CIFER shows. So that still needs to be completed. It's due within 9 months after fiscal year end. So you still have a little bit of time on that, and we can work with you guys to help you on that. They waived the audit requirement on that for all the agencies for year one because it's been frankly a disaster because the instructions on this form aren't very good.
When I talked to Hope the other day, is this all interrelated with the stuff we've talked about with Joel about that the rules aren't clear on, remember
Yeah, no, this
I
is,
get a little
this is-
confused on all those new, the
this
GATA
is
stuff.
completely separate
Okay.
from the comptroller end of it, correct?
Right.
And they just created this,
Where's Joel?
highway
Homeowner.
engineer.
Oh, okay.
They just created this because, like she said, the state got an audit. So the trickle down of that is to make sure that none of the smaller agencies are doing anything wrong. So they keep just creating form after form. It started with the Gatsby thing, or whatever, and then it went to GAP, and then it went to, and they're all just redundant, really.
Well, I think the state was getting findings for not monitoring money they pass through well enough, and this is their attempt to do that, probably without the proper staff.
And it's a horrible attempt because they started midway through something and then, you know.
Yeah. So it doesn't have to be audited this year, it does have to be completed, and I'll schedule an appointment and you guys can show me your GATA portal and see what it's saying out there as your requirements. But then for your November 2019 fiscal year, it has to have an audit opinion attached to it. It can either be attached to your financial statement or a separate report just with an opinion that from the auditors that this in all material respects is reasonable as compared to your financial statement audit. So we can help you work through that process some because it is new and unique and a little bit cumbersome.
We're gonna, I know when I spoke with you, I hope that we talked about, I guess now that this is kind of completed, getting you back out here or whatever, like we had originally talked about, quarterly meetings and stuff and those kind of things. I'm guessing with the budget stuff now rearing up, that's probably gonna consume a lot of Jill and
Okay.
Amanda's time here in the next 60 days.
Okay.
But maybe in early October, something like that, so we can get ahead of curve on the year-end stuff, or
Okay.
early, maybe after the board meetings in October, mid-October, something like that, might be a good, I don't know, maybe
Yeah.
Jill, you have a different,
Well, and that cycle's due August 31st.
well, okay,
Yeah.
but, I mean, obviously, you might need to come back for that, but I mean, as far as, you were talking a little bit earlier about getting
Sure.
together and maybe on these journal entries and stuff like that, making sure we're getting things done ahead of time, and so it's not kind of postmortem after the year closes and
Right.
stuff. Probably need to,
Yeah, that would be a good idea, and I know I have some that I'm, catching up in right now, so October would be a good time.
Okay. Sounds good. Does anyone have any other questions?
I don't think so.
Thank you.
Thank you.
Appreciate you coming.
Thanks for your patience and getting us all wrapped up. We got
Thank you
that.
for all your help.
Thank you.
And with the budget in mind, we're probably gonna need a quote for,
It's
You're
about
the
that
next-
time, isn't it?
yeah, we're getting to that point, so,
All right.
But thank you both. Okay. Well, maybe we should just go, we had Judge Kinzer in first, but maybe we should go to the sheriff and
Yeah, 'cause a lot of
Chris,
times
since
he
they're
doesn't-
sitting here.
Yeah, a
And,
lot of times he doesn't.
and he normally doesn't show up, so,
He can just look at his later.
okay. Do we need to know anything about the layout of the book here or anything? Jill?
No, I tried to keep it as, the same as you're used to. So the flow goes, you have your Tuesday, or your Thursday, reports, and they should be in order, as well as the, Tuesday runs the same. Like I said, I just tried to keep them as, consistent with the years prior.
Yep. Okay, we'll skip over the judge's stuff and the juror and all that stuff and go to the general fund sheriff page.
That's weird. One.
I know, it's page 1, but there's
It says
probably about
210 at the top, Sheriff.
Yes.
110, 210 in the upper left. Good morning.
where you look and
You
expect you to
guys
find it.
What? Yeah, I'm with 210, maybe 110.
110, 210 carried.
110, 210.
Okay, a few things here. I wanted to bring out the top of that where it says department head salary, the 75,750. That includes, I believe, $2,500 in stipend taxes that the county always puts in that because the salary is set for 4 years for a term. The base salary will be $73,250 next year. It's $71,500 right now, and it is scheduled December 1 to get a $1,750 raise on that per back in May, a year ago when the salary was set by the county board. So that figure, that $75,750 includes $2,500 of stipend taxes that the county pays. Administrative assistant salaries, that includes 2 of them. I will be losing one August 23rd. And I've talked with Lisa Hines already. We're going to be doing an internal kind of transfer of one of her employees who has quite a bit of experience in not only with the courts but also with the sheriff's office, is going to be coming to work for me as an administrative assistant. Would be on the 26th, I guess, of August. So that should be a smooth transition there. The sergeants and lieutenant salaries, I'm just going to hit the highlights on those. It's actually page 3 of this report has the payroll. Sergeants and lieutenants, 2.5% raise. That has been traditional of the FOP agreements, the collective bargaining agreements that the county has had with the FOP, I think for the last 6 years, I believe, the last 2 contracts. So then the merit deputy salaries.
I think it's page 9 in ours.
Okay.
In our book.
How many sergeants and lieutenants do you have?
I have 1 lieutenant and 2 sergeants. Page 9. This is the salaries. You will see on the far right, up top, obviously the administrative assistants are getting a 2%. Sergeants and lieutenants are listed right underneath them. That's 2.5. Deputies are underneath that. You'll see a variance of increases there. The deputies have a step raise system in their contract. They don't get a step raise every year that they complete, but there are certain years where they get an increase because of their years of service. So you'll see some of them that don't hit their step increase just have the 2.5% that year. Others who hit it, it's more of a step or of an increase there for that year because of the years of service. Below that is the corrections. Corrections, their contract is they get the 2.5%, which has been traditional for, like I said, at least the last 6 years, probably longer than that, come December 1. Then on their anniversary date in their contract, they get a 2% increase on their anniversary date. So they get a 4.5%. The 3 bottom ones are my 3 youngest or my 3 newest correctional officers. They have a step increase for the first 3 years of employment. So when after next year, those increases will go from 6.8 back down to 4.5%. I do have 3 part-timers. That has been helping out some. If I have to hold a correctional officer over for overtime right now, my least senior full-time correctional officer, we're paying about between $25 and $26 an hour overtime for them to work. With the part-timers, we're paying $15 and they don't get any benefits with that. So I have to, per the contract, I have to offer overtime to full-time employees first. If they don't want it, then I've got 3 part-time correctional officers there that we can call and utilize. Then you'll see maintenance supervisor Chris Drake's salary there, that's a 2% increase, and that is split with the admin center, budgeted for budgeting purposes, I believe, 50-50. And then Yvonne is our full-time housekeeper over at the courthouse and jail, and that shows a 2% increase as far as maintenance goes. Court security also has a 2% increase, and unless the county has been thinking of, for the non-union employees giving more than that, I figured the 2% in on that. So that's where the individual salaries come into play.
Sure. Did I hear incorrectly? I thought you said 2%, 2.5% on the deputy increases, and it shows 2 here. Did you say 2 or 2.5?
Well, it should be 2.5.
So it's 2 here.
Okay, the one that I sent.
This says 7.5. I don't know if that makes a difference up in the top.
Yeah.
Yeah, that's when she sent it to me, and I
Oh.
filled it out, and then I emailed it back. So, yeah, because okay, so those numbers,
All these numbers will change a little bit now.
they will change a little bit. Basically, on your
What did you have in total for the sergeant and lieutenant, or do you have?
sergeant and
your
lieutenant
total?
on your page 1 of your
Yeah.
sergeant and lieutenant, I have 246,170.
Yeah.
107
That matches, so maybe it's, I think the
just
totals are right, but the breakdown
The
is right
breakdown
wrong.
is-
Okay.
That's
Maybe we
fine.
need to get an updated one.
No, that's fine. I'm glad, because, yeah. So going back to page 1, yes,
These percentages on these increases, do you have some advanced knowledge of what they're gonna be? The contract is gonna be up for renewal at the end of this year, we have negotiations scheduled next month.
with the sheriff's FOP, I can't speak for the dispatcher, the telecommunicators, but I'm going based on, I know it's the last 2, probably 3 contracts where they've gone 2.5. They've agreed to 2.5. I have not heard anything that would indicate they're going to ask for more than that. A lot of it is, I believe with them, our past negotiations have been if insurance stays what they feel reasonable cost to them, then they're okay with the 2.5. But you're right, we do have negotiations coming up, so.
The other thing that plays into it is that the cost of living and inflation figures are less than 1%.
Yeah,
So
and this group, and I'm, it's an open meeting, so I don't have a problem saying it. The county negotiating committee, ever since I've been involved with it, with the FOP, which goes back to about 1996, the county will argue the cost of living, and when it comes to arbitration, the arbitrator will look at what the average contract award is nationwide, and it's always well above that. And they'll usually go with that. So,
my question was simply, I think the last time we negotiated a contract, you had some indications already of what they were looking for.
I have not
I'd like to
heard.
know if you know that
Yes,
now.
and not, obviously not speaking for them because I can't. I have not heard anything where there has been any talk of any issues. So, and that's why I plugged that in, is like I said, I know 6 years for sure, probably longer than that, it's been at 2.5% for them come December 1. Then the merit deputy salary, I've got the 584,791, okay. And correctional is 564,
Yep.
226.
You
Now,
must have your numbers.
so the one thing with corrections, I'm hoping that it's gonna be less than that, because that figure also includes $75,000 for overtime. And if we're utilizing part-timers more than the full-time, and during the summers we usually do, because everybody wants their vacation time, and so I'm hoping that bottom line of the 564 actually is less than that, because I do have 3 part-timers we can use. Below that, the janitor's salary, that was on page 9 for you folks, that's Chris and Yvonne. That's half of Chris's salary and all of Yvonne's salary on that. Office expense, I increased that to 10,000 because I'm going to have to, we've got a new fingerprint machine, live scan fingerprint machine this year, and the first year, the maintenance agreement is included in that. So I'm gonna have to get a maintenance agreement on that, which I haven't got the figures on it yet, but it's gonna be, I would imagine, between $1,000 and $2,000 for the year on that, so I increased that. Merit board expense stayed the same, mileage and travel stayed the same. Gas and oil I brought down a little bit, that's always a guess. I know it's higher right now than it has been lately, but we have been doing well so far on our on that line item. So I looked back at what we paid 2014, I think was one point when it was like almost $4 a gallon. That's why I think we spent about $66,000 that year. But
If your new car's working out, they as efficient as
they are
yours?
working. They're getting a little bit better gas mileage than what our Impalas do, and that's because these have, the Tahoes have the, I don't know what the technical description is, but yeah, it goes down to 4 cylinders when you're not
Oh, I see.
pushing it hard, so it goes from 8 to 4, so, yeah, we have been doing better, mileage wise.
That's a tough one to always figure out.
It is, just because you never know what's gonna happen with the price of oil. Maintenance of autos, I did increase, to skip ahead a little bit, I'm gonna ask in the out of the public safety fund for 3 new squads, but we are still having to keep squads a little longer than what I would like with more mileage on them, and I increased that. I looked at what we're trending at for this year, 29,000. So we're gonna, even with replacing, if we replace 3 of them, there's still gonna be three of them that I'm gonna have to keep a 4th year until next year to get them replaced, the 2021 budget. So I did increase that a little bit. Radio maintenance, radio equipment stayed the same, as did radio and audio equipment. Education, I dropped down to 500. Training, I kept it 9,000. We will get reimbursed on the training for the correctional officer. We had to pay, I think, around 4,000, and we get a percentage of that back, which I've already submitted to the state. Off the top of my head, I think it's around $3,200 or $3,400 we're going to get reimbursed out of that cost, but it may be 6 months before we get it. Uniform and weapons, I increased for a couple reasons. We can no longer, our tasers, our cartridges for our tasers, we can no longer buy from our local vendor, which was Ray O'Haron Police Supply in Danville. We have to go directly through Taser Corporation now, and the cost on that went up a little bit. So, and I'm also going to have to be purchasing a new Taser out of that line item for 2020 as well. Service contracts, that was a guess for me. I talked with Chris about it. If you look in the past to the left, it's been anywhere from 11 to 19,000. Down at the bottom of my page, it indicates that last year on September 5th, management increased that request, and that was for salt and snow removal to be split with the admin center here. So that's why we basically added 15.5. I left that in there because I don't know what the plan is on snow removal. So for
We need a
budget,
plan.
for budget purposes, I left that in there knowing that it may change, obviously, depending on what we do. Diet of prisoners, I see what our forecast is. I don't know if we'll hit that. I do know.
Sorry.
Yep.
Okay. I'm just trying to remember which line I'm, so the reason why we have it forecasted so big for the rest of 2019, Jill, Amanda, like the 48 versus, is that
because of
Salt.
the salt,
Salt,
that was the salt,
yeah.
okay, that's it.
Yeah. The diet of prisoners, we're trending high this year. That's why we very well may hit the 94 or 95,000 on feeding them. There's been several weeks at a time this year that we've had 40 plus inmates incarcerated when last year I think our average was in the low 20s. So that will fluctuate some, but I did increase that from 81.5 to 85. Again, that's one you never know how many prisoners you're going to have in a given year. Doctor fees is zeroed out again. We pay that out of the inmate medical that we collect fees from the inmates. The medical expenses are the non-doctor fees. That's if we have to prescriptions, if they see a nurse practitioner and they have to do a follow-up with x-rays or something like this. I left that the same. This year it's running a little high because we've had more in there, but I think
When you have something like an x-ray, you transport them to the
Yes.
hospital here in town?
yes, we go out to Airco Memorial and
Yeah.
they get
No
the
problem, I
equipment out
just
there.
quit.
Yeah.
They went, so.
Yep, that's where they go. We have had some over the years that get referred to a specialist, which we've had to take them to Champaign or other places, but that doesn't happen very often. Prisoner supplies, I increased. That's what we buy their blankets, sheets, mattresses and all that stuff out of, and we've had to buy extra this year because we've been running higher, so, what's that? Yeah, well, sometimes they do rip them up and try and flush them.
Can we get another one then?
Yes, we have to, yes. So I increased that a little bit, from 5,000 to 6,500. GPS home confinement is really out of my hands. This is one where I've told the last probably 7 or 8 or 9 years of budgeting with different finance committees. GPS is an ankle bracelet put on a inmate or a probationer that probation monitors. They collect the fees on, but for whatever reason that they've had it coming out of the sheriff's budget, which is fine. But when you look at what it actually costs, you have to look at, like right now they're projecting $5,700 coming out of my budget for that. And then you have to go to the probation side of it to see the fees they collected for GPS, because I think they get $10 a day that those people are on it, and see how much they brought in compared to what the cost was. And I don't believe that that's a negative.